Yeah, you've worked with a lot of businesses. What are the most effective structures you've seen that work well?
Okay, yeah, so great question. On the basis we're talking about sort of not startup or micro businesses, let's talk about bigger business, maybe $1 million or more in turnover.
Mm.
Traditionally, so not sole trader partnership. Let's move on to trusts and companies as structures. Trusts are still relevant if you've got typically a mum and dad, maybe not drawing salary, taking trust distributions. Really the top rate doesn't start until they earn more than 190,000 each per year. So let's call it 400,000 a year is a good time to think more seriously about moving to a company structure.
Mm-hmm.
You can typically still have and do have a company as a trustee for a trust, but you're not operating through a trust. It's just a trustee.
Right.
I'll keep all the technical
So
stuff.
what's the purpose of a trust for those that don't know?
Yeah, okay. I mean, probably a trust common in America, but also very good for literally protecting assets, distributing income of those assets to family members. There are some rules for children under 18. You're looking at about $400, $416 you can give to children under 18.
Right. So I can't have my 3-year-old daughter receiving 190,000 per annum?
Not yet, but in a few years' time, we'll look at employing her and paying her salary for some work. But trusts are great for holding assets, holding investments. They can run a business through them, but they still have traditionally a company as a trustee to still protect the, I suppose, from creditors suing the trustees or protecting the assets in the trust. That threshold of roughly 400K becomes more relevant if you're making that sort of money and you're not having to distribute the profits out and pay tax on it personally. Right. You can retain the profits within the company. So in Australia, under 50 mil turnover, you're talking 25% company tax rate. If you're holding passive style of assets in companies, rents and those sort of things, you pay a flat 30% rate. So there's some tests there in terms of its level of income, whether it's taxed at 25 or 30%. Right. But tax rate's a big one as to why it's a trade through a company.
So that obviously, if you start to become a higher income earner and your tax bracket is getting up around the sort of 48 cents in the dollar, I guess, yeah. Yep. After any tax concessions you might get, you're saying that with a company set up / trust, you retain those profits at the end of the year within the company and then just pay the corporate tax rates.
100%. The difference is whether you operate through a trust or a company, if you pull every single dollar out every year, there's actually very little difference. You take 100% of your profits out by trust distributions or 100% of your profits out post-company tax by way of dividends. There's actually no difference because it's going to come back and hit you at a personal level. But if you are and have got a good business that you need to retain profits to build your war chest, buy the businesses, buy assets, there is a way to at least defer or retain profits in the business so that you can continue to trade and protect your working capital.